What's up? I'm standing in front of my 100th rental property. I plan to BRRRR this property, which stands for buy, renovate, rent, refinance, and repeat. It's how I built my entire portfolio. So in this video, I'm gonna walk you through, talking about the renovation plans, break down the numbers to you, and show you everything top to bottom. Let's take a look. So the first step of the BRRRR process stands for buy. So you gotta find a property to buy that's at a discount. This house specifically, I actually ended up buying from a wholesaler. So a wholesaler picked up the phone and cold called a seller that just inherited the property. It's called probate. So they inherited the property, they got a phone call and they asked, hey, are you interested in selling your house? They said yes, and then they put that property under contract. I ended up buying it. So first things first, you have to get a property at a discount under contract. Again, that can be from cold calling, direct mail, SMS, text blasting. There's all different types of lists you can market to: probates, divorces, high equities, code enforcements, tax liens. There's so many ways to market. I got plenty of other videos here on my channel, but first steps first, find a discounted property. So when you buy houses, there's 4 things that you need to look for. You need to figure out what the ARV, the after repaired value is. What's this going to be worth once it's fully renovated? You also have to come up with the rehab budget. Very, very important that you understand the renovation budget. You also need to look at the location. Location is very, very important because you can never move a property. There's a saying in real estate, it's location, location, location. And then the last one is how much you can rent this for once it's renovated. So similar to finding the ARV, after repaired value of the property, you also need to find the ARR, the after repaired rent. So those are the 4 numbers you gotta look for: ARV, rehab, location, and rental amount. So the next step is funding the deal, right? I said I've been able to do this with very little to none of my own money. It's because I use what's called private money lenders to fund my deals. So I ended up buying this property for $74,000 and the renovation is gonna be $47,000. So all into this deal, I'm gonna be all in for $121,000. So I'm not using my money, it's not my money. I'm using a private money lender's money to fund 100% of this deal. So the day of closing, private money lender funds that to the title company, the seller gets their portion, and then I get that $47,000 to fund the entire renovation. So there's 47 grand in my bank account to fund this project to get it to the after repaired value. So once you buy it and you have the money to renovate it, now you gotta come in and you gotta do the work. So I'm gonna walk you through and talk about some of the repairs we're doing and some of the costs associated with it. So first things first, the flooring throughout the entire property, we're gonna be putting in LVT planks. It's about $4 per square foot for labor and material to lay the flooring down. When you renovate kitchens, you have to do something with the cabinets. To paint cabinets may cost you $1,000. To replace all new cabinets for lowers and uppers, depending on the floor plan, it can cost you anywhere from like $2,000 to $4,000 or $5,000, unless you go like crazy high end, but these are just for average everyday rental properties. Then you're gonna have to put granite on top of these cabinets. So that can cost anywhere from like $1,500 to $2,500, depending on the size of the kitchen. And then we put in black appliances, so black fridge, stove, microwave, and dishwasher, which is gonna cost us roughly another $3,000. We're gonna have to do some drywall work. That's gonna cost a couple $1,000s. Then we're gonna have to paint the entire property, the ceilings, the walls, the trim, the doors, everything. That's gonna cost us another $3,000 to $4,000. And then we're also gonna have to get all new doors and all new trim installed as well, which is gonna cost, again, another few $1,000s. So then if you're renovating a half bath, very simple, might cost you $1,000. So that's for the toilet, the vanity, the mirrors, the light, all that stuff. But this is a full bathroom. As you can see, there's really nothing here. So typically it's gonna cost you $5-ish grand for bathrooms. This one's gonna need a little bit more work, so maybe $6,000. We're also gonna put in a new hot water tank. It's gonna cost about $1,200. We're gonna put in a new furnace. It's gonna cost about $3,000. And we're gonna put in an air conditioning unit outside, which is gonna be another $3,000. To start the renovation off, you're gonna have to demo the project as well. There's a ton of stuff in here, on top of demoing the kitchens and the bathrooms and the doors and everything else. So demo and trash removal can cost you anywhere from like $500 to, you know, many, many, many thousands of dollars. I think this project was like $5,000 or $6,000 because you have to pay for the dumpsters, you have to pay for the labor. Dumpsters are like $500 each. You know, you load a couple dumpsters, that's a couple grand just in and of itself. And we also got to put in new windows. Costs about $400 to $450 per window. So we talked about buying, and then we talked about renovating. Now we have to rent this out. So this is a 3-bedroom, 1-bath house on a slab. It's about 1,100 square feet. I own 3 other houses just like this one, just a couple blocks from here. Those properties are renting for $1,400 per month. So that's what I budgeted for this, is to get $1,400 per month. I personally use a property management company to lease my properties. You can do it yourself if you want to as well. But step number 4 is to refinance this. So refinance the property with a bank. And there's a lot of different types of lenders out there. DSCRs, Fannie Freddies, small local community banks, they're all vastly different. I'm gonna give you the bullet points on all of them really quick. With Fannie Freddie loans, they have a minimum 12-month seasoning, means you have to own this for 12 months before you refinance it. They will give you 75% on the refinance though. So if it's worth 200, they'll give you back 150,000. It's probably gonna be the lowest interest rates you can find. You know, in today's markets, might maybe 6.5% on it. And you also have to be fully underwritten. So you need to have tax returns, you have to have good credit, you have to have a good debt to income ratio, all these things to be able to qualify for a Fannie Freddie loan. The next one is called DSCR, debt service coverage ratio loans. Kind of similar, but seasoning typically is a lot less, maybe 3 to 6 months. They're gonna give you roughly about a 7.5 to an 8% interest rate in today's market. It's a 30-year term, just like the Fannie and Freddie loans. They're both locked in for 30 years. And these ones typically don't have as much underwriting. So you don't have to go through all the paperwork and the tax returns and the credit filings and all these things to get approved for the loan, because it's based on the cash flow of the property. That's how the loan is underwritten. Can the property cash flow? And then the third one is small local community banks. This is what I like to use the most, but there's some variables here. So typically it'll be a 20 to a 25-year loan instead of a 30-year loan, but you're also gonna get a little bit lower interest rate, maybe 6, maybe 6.5% in today's market. And again, you're gonna be fully underwritten. So you gotta have tax returns, you gotta have credit checks, you gotta do all the paperwork to get fully underwritten to qualify for this property. And similar to the other ones, they'll typically give you like 70 to 75% on the refinance. So if the property's worth 200 grand, they'll usually give you back like 140 to 150,000, but you can use that money to pay off your lenders. So it'll cost me about $5,000 in interest payments to my private money lender. We'll also have about $4,000 in closing costs on the refinance. So my true all-in number for this deal is $130,000. I'm gonna owe 130 grand when this deal is all said and done. So the ARV on this property is about $165,000. So I'm gonna get a 75% cash out on this deal, meaning I'm gonna get back $124,000 from the bank. And remember, I'm all in for 130. So I'm only gonna have to keep about $6,000 of my money into this deal to own this asset to build generational wealth. Past that, you gotta worry about the cash flow as well. So the taxes are $900 a year. The insurance is $650 a year. Property management is gonna be about $100 a month. Principal and interest payment is gonna be about $800 a month. So my total monthly payment is about $1,000 per month, and my rent on this property will be bringing in about $1,400 per month. So it's about a 7 cap rate, which is decent for the market, and it's a 1.21 debt service coverage ratio, which you always want to be a little bit above 1.2 on the DSCR. So as I started this video out, this is my 100th time doing this. It's my 100th rental property. And as you can see, there's some deals where I have $0 of my own money into it, and other deals where I might have to keep $2,000, $4,000, $6,000, $10,000 of my money into this deal. But why would I not put a little bit of money into these assets that then allow me to build generational wealth? The houses, I said had 3 other houses just like this. When I bought those houses just a few years ago, they were worth 100 grand. Now they're worth 165,000 times 3. That's almost $200,000 in wealth that I've been able to create just by owning these properties. And again, basically using not any of my own money. The BRRRR method is an amazing strategy to build wealth in real estate. So make sure you smash that subscribe and like button so you can get more content just like this.